Okay, what's going on? What's going on? Good afternoon. Let's see here. Let's go ahead and switch over here really quickly. Okay, so let's see here what we got. So, really quick, this is just going to be pretty much a top-down analysis of the NQ setup that we took today. So, showing the higher time frame area that we were looking for, and then as well going over the overall markets as well, just what happened today. I thought today was a pretty clean day, bullish continuation type of day. We have a really big week of news. Another thing I'll talk a little bit about maybe during this session is QQQ alignment with the NQ trades, and then as well we'll take a look at silver and gold just to see how they dropped off and just completely are crushing people right now. So yeah, so let me look into the Telegram and see here what we actually posted today inside the Ricky Trades Telegram. Because I believe I did drop a pre-market. I may not have today. I may have been on a call during that time. So we were looking for a bullish continuation, right? So this level is what I was really focused on. Let me pull this up really quick. Sorry. Okay, so I don't know. We'll check on the volume and stuff like that, and just kind of see what we're doing here because I did change a couple settings. But just so you guys have an idea of the area that I was personally looking for, I was looking for this big candle here, right? This demand candle to be respected because how we came into the last one before we went and we made a new high, we ended up taking that liquidity that we were looking for, the 26,100 level, and now we've just pulled back into this range coming into today. Excuse me. And so when you look at the 4 hour range as well, for me, I was looking at the overnight price. So if you're looking here at the far right side, you have the overnight price open, which was here, and price just falls off and kind of falls lower. Now, when you're looking at fractal markets and looking at time frames simultaneously, you can see that when we fell down on that H1 and that H4, we actually fell into the range exactly where we wanted, especially on the daily, right? Because I'm looking at what's called a scoop. So this is your scoop low. This is your new high, right? We're still holding bullish structure on a higher time frame daily. And then when I can look at a low that I'm identifying here, which is this low to that high on that H4, I can see that this type of pullback is exactly what I'm looking for. I'm looking for about a 71% retracement, 78.6 retracement, and then for buyers to step inside that level inside of a daily demand. And so that's what we got today. So I'll kind of go over, that's the top-down analysis. That's the understanding of like what we were seeing from a higher time frame perspective is these were the Q areas, right? Like this is your low, this is your high, and then understanding the 4 phases of the market is something we'll go over time as well. I'm not gonna like jump into it today, just kind of want to stick to a trade review. So when you look at the overall price when it comes to the 50 and 5, and I'll show the 5 and the 1 minute, they were very aggressive at the New York Open. So let me pull this over here. And let's make sure we can see this. Okay, cool. And I'm pretty sure it's showing me, let me type something in the chat myself. But okay, so if you look at the open, it's all going to come down to location as well. So I'm going to do this here. When you look at that first 5 minute candle, like I like to execute on 15, 5, and 1. On that first 5 minute candles where you see the blue dot, we immediately in the first 5 minutes went up like, what was it? Believe almost 100 handles in that first move, right? And so what I'm not going to do is I'm not going to fight the trend of the market, right? If you start to fight the trend of the market, you're going to be on the wrong side. And so for me, I don't really like to position myself once we've already taken a high of day. But then when you go and look at the 1 minute price action, the edge actually did present itself, and that's the entry that we ended up taking. And so you had the first 5 minutes, like you can see here on the left, we closed, so 8:30 to 8:35, we closed bullish. And then there was a candle here, which was, if you're looking at the 1 minute here, you have 8:31 to 8:35. You can see it's very subtle, but there's that shift in price delivery on a 1 minute, right? Like if you're looking at smaller time frames, it's even more clear. But you can just see that this candle is engulfing. And when I see this type of situation, and I already know what I'm looking for on higher time frame, I call this a bullish continuation trade, right? And it usually happens right at the opening range. And so when I seen this NCE, basically all I'm looking for in this area after that 5 minute close was this candle to close higher like it did, right? So 834 to 835. And then what I wanted to do was I wanted to enter off of this candle, which this is what we ended up actually taking, right? And so we've seen this candle close 834 to 835. Then we had the area to frame up edge. And now this edge low was 30 handles risk. Now me personally, what I ended up doing was I ended up using this black candle here, my down candle, my most previous down candle in the uptrending market. I used its low, right, and gave myself I had about a 23 handle risk. 22 is what my risk ended up being. Excuse me, actually it was 23. I'll look at I haven't had a chance to watch the replay yet. So it was about a 23 handle risk. I'm trying to shoot for about 20 for 60. And so because this was a bullish continuation, I was looking to size into the trade a lot smaller than normal, right? So now if this would have been a situation where price was, more down in here and it was building, that proper, structure that we like to see, I probably go, full volume in a situation like this because I like to go full volume inside of accumulations and areas up to distribution. But when you're on a bullish continuation, I'm just looking to catch that edge, make sure I have our multiple mindset, and then be looking left to be able to find places to exit. So as we entered on that 5 and 1 minute setup, we had about a 24 handle risk, right? We're looking left. We're looking for certain areas of supply. We're looking for a target of 25,950 to take that previous day high. So this would have been Friday's New York shorts, right? Their risk sitting in this area. We were looking to take that area up, right? So if you see this, in the first few minutes of this trade, it started to play out really well. So we had the NCE. So this was 34 to 35, and then 35 to 40 is where we took the trade. Price goes in our favor and starts to push. Now, when this price on the 5 minute here, right, closes in our favor, that very next 5 minute candle, which would have been 35 to 40, then we have 40 to 45. Now what you end up seeing is the trailing risk rules, right? You have a top end imbalance on a 5 minutes inside of an expansion, and then you have down candles in an uptrending market, right? So this is your down candle, and then you can see right here, if you look closely, white candles start to close higher, which means signs of strength. Now, for me personally, because that was the opening range trade and it was a bullish continuation, immediately I had 2 contracts on this setup, and immediately what I ended up doing was start to trail one here and go break even on the second one, if that makes sense. So 2 contracts across all 5 accounts, and then what I did was slid that one risk right up under that down candle's low, and then kept the other one break even to see if we could actually ride that move to the upside, okay? And let's see here. So when you look left, right, on a 15, and you're looking at your previous day high to your current low of day, now I'm starting to evaluate from this high that you guys see in purple, right, down to the current low of day. And I want to see it at that point, right, a 71 to 78.6 retracement, or at least be inside supply looking left. And so when I'm targeting these areas, one of the areas I was targeting I thought was a really good area was here, because you actually had like liquidity that aligned with this, and it was above our 78.6 of the swing from that previous day high. And so when you look at that now, at this point, you're shooting for here, which is going to be a 1 to 7R, right? Which is, that's a pretty good trade. And if you're using trailing risk management, then obviously you can squeeze out a little bit more. But at this exact moment, right, in that first 5 minute candle that we got right after we took the trade, which would have been, like I said, 35 to 40, we've gotten this down candle in the uptrending market. So essentially, when you can identify a 1 to 2R, right? So if you're really willing to risk 1 to get 2, right? When you can see that, doesn't matter what lot size you use, it's just how the charts work. You can start to trail that off. That's how I personally like to use my trailing risk management. And so kept the other one break even, and then we ended up pushing a little bit more here. As you can see, this would have been 850 to 855, right? And this would have been 855 to 855 into 9 a.m. And then we kind of got a little choppy and kind of showed that we wanted to go lower, but we didn't do any kind of structure breaks under the demand, right? Like right here on this 1 minute demand, it came down right at 9 a.m. and respected, and then you seen 901 to 902 bullish close, and then you had a 902 to 903 another bullish close, and then here at 905 to 906 we're actually making new highs again. And so what I was able to do on that trade is keep that one contract break even, and then what did I get, right? I had a 5 minute down candle in an uptrending market, so I slid one of those one of those risk, right, one of those contracts right under this low to secure more of the profits. And then I had this break even, right, trade from here. So all I did essentially with that break even with the remainder, so that remainder contract, is I just move it up to the first spot that I had the risk on. So like you moved your risk now to this 5 minute down candle's low, or like this area right here, and then you've taken the remainder of the trade and went ahead and secured even more, right? Does that make sense? And so if you guys could just drop something in the chat, 'cause I'm trying to see if it's showing up. Let me look over here. Okay, I can see it over here. I can see what you put, Tay. So I just have to fix something on OBS side because I can see the stuff, but I just can't see the actual chat, which I need to see the chat. So I'll keep it right here so I can, in case anyone asks any questions. But so yeah, so that's basically how I was looking at that trade, and it's a bullish continuation trade. So you're not really looking for too much to happen, right? You're looking for price to go deliver, and then once price starts to break structure against your trend, then you can continuously scale out. So one was break even, like I said, one was here, and then we had price start to close higher here at 905 to 906. So I was able to secure a little bit more, right? And so when you look at the R multiple on that, in that sense, you're securing about a 1 to 3, right? And so as price continues to go higher here, you're waiting on 5 minute candles to show you weakness, and then going from 9 to 905, and then 905 to 910, and then 910 to 915. So I'm looking at this candle right here, right? We're getting nothing but bullish strength. So we're just getting nothing but bullish closures on the way up. And as well, if you're trying to keep it tight on half of that order, you have down candles right inside of an uptrend market. This is a down candle. Price ends up closing higher. Now you can take that risk that was here, right, and go ahead and trail it to like this area here, right? Like, so it's going to be, the reason why you won't get stopped out and you're able to use this candle right here is because you're not going to trail this until you've seen like a strong close above the down candle. Now, if you went ahead and already done this, right, and it takes you out for one, now you'll just take that remainder that you had here and start to trail it up to the next spot, right, and just continue to wait and be patient and ride the wave, okay? And so there's different ways you can do it, but the way I ended up doing it was I like to wait on a 5 minute break. And so we weren't getting any 5 minute breaks until we got to, it was around 9:20, 9:25, and then we had 9:25 to 9:30, right? I had trailed my risk in that first hour right here to this low here, and price comes back down and takes me out for the profit. So I ended up being able to squeeze a lot more out of that move by being able to squeeze my full 2 contracts out at that time, right? And so had a lot of patience. I think that it was pretty crazy play, but like Mondays can be like that, and then we have nothing but just red folders all week. And so that was also just I'm looking for A/B setups. I'm looking for like 1 to 2 risk reward setups per day. I'm not trying to take too many more than 10 trades in a week, right, across these accounts, because I want to have the quality and make sure that I'm focused on the execution more than I am the P&L. And so that's what we ended up getting. And price started to kind of sell off. I thought maybe they were going to fall back into the IB going into that second half of the day, and then they recovered V-shape, right? So if you see this right here, we'll kind of like go over it to here. They recovered V-shape up here in the highs, so they weren't just like falling off of a cliff around 10:05. So the best trades happen and the most transitions happen in the first 15 minutes or the last 15 minutes of an hour. And so you've seen buyers step back in here at 10:05 to 10:10, and then you see that V-shaped recovery start to go, and then you just have to think in your head, like, where would the people who just decided to short that didn't have these buys, where are they going to put their risk? And it's going to be at the high of day, all right? And so you've seen basically price kind of go up and test the 25.9, then comes back into the area and then goes and closes higher. That was that sign of strength, that if you did have anything left on that continuation, like you didn't pull everything here, then you've been able to utilize like this low here, and now with this closure here, you could probably utilize this to continue if you were one to sit there and actually watch that. Me personally, I just was we were already an hour in, and we were able to secure and the market took us out. We were able to secure like a 1 to 9 R risk trade, which is, I mean, that's a pretty good day, right? I mean, I'm gonna, like I said, go over how you can look at this from a risk reward ratio standpoint and understand that even if you were about 30-40%, if you're setting trades up the right way, that you're still going to be profitable. But you have to really be selective, and you have to really let the numbers be the numbers. Okay, so that was pretty much what we've seen there. I'm going to kind of go over the overall markets. What is what really kind of gave me the idea that we were going to go higher. I wanted to see from a comparative strength analysis, I wanted to see Friday's open and previous day high delivered on ES, which is the one here in the middle. I wanted to see 49,200 delivered on YM, which was just a really good double top target, and price was failing to pretty much fall over on all of them when you look at like where they were at on a 4-hour perspective. So I showed that drawing of the Fibonacci retracement for NQ. So using that scoop low of like here to here, right? You would do the same thing on ES from here to here, and it makes sense to why you're going to see, from that sell side, the retracement at a 71% retracement after the draw on liquidity. And so just knowing context, understanding like what you're going to get with where you're at. And then I'd say YM was a little bit harder, but because they created a dump candle, right? When you're looking at the, I like the 1 hours of it. When you're looking at the dump candle from overnight, they set that low, and then it's the same situation as you're going into New York. Is they created the manipulation down into the imbalance, right, 850 level, and then pump that price right back up. So you just have to know and understand what a 15-minute wick is on that YM, and that 15-minute wick, when you go down and look at it on a 1 minute, right, because it's a 5-minute wick as well. This is where you're going to have to be able to identify that demand and understand, getting on that right side. So for me personally, I think this was a harder move to play unless you're really playing inside the 1 minute demand. And then, as soon as the move moves in your favor, you're thinking risk to entry, right? So this would have been a little bit more difficult, because you're looking at 73 handles even off like rocking the demand play, right? So me personally, I just didn't see it, but I could see the overall price when they 15-minute wicked down to the bigger area to see the fill to go higher. So seeing that, and then also, like I said, adding in that confluence of like QQQ, for me, like right from the open, they failed to take those lows. So people who had, option plays in the premium and, had targets, etc., I would think that those individuals had, they wanted to get this wick low, and they were failed to do that. And that first 15-minute candle of QQQ was just showing the same situation, which was this was essentially our low, right? This was our high, and price came back into that area and then responded very bullish to push out of that area to maybe possibly push back up into the 630. So a lot of times when you're watching this, you're going to see the reaction on NQ, like it's going to draw on the same type of liquidity that it's doing on the other assets, okay? And so, to kind of wrap it up, what we were looking for was that daily demand, just to kind of go back over that, right? We were looking for that daily demand, which was here. We were looking for about 50% of that candle, so like looking here to here, right, and looking below. And then we were anticipating that if you went short, right, like we talk about this all the time, right, if you went short in the overnight, like if you just have an itch to trade that 6 p.m. open, right, on Sunday nights, right, and you find maybe you got stopped out a couple times, whatever, but you decided to short in this, let's just say 25,600 area. Well, the only way for you to get out of this short is that you probably had a buy limit right on this wick low, right, the low of day at that point. Let me kind of do this, sorry, the low of day at this point, or you had a buy limit on a higher time frame, right? So we look at something more like something like this, right? You had a higher time frame bias, like 4 hour, 1 hour. So this would have been that 4 hour demand area inside of the 1 hour, candle, to see if you could have like a buy limit sitting there, right? Or executing a market buy. Me personally, what I do and how my strategy works is I like to let that overnight player, play, and then anticipate short covering, right? So anticipate that the only way for them to make money is if they hit the buy button, and then that's what we've seen at New York. Now, sometimes in my past, I don't play continuations as good, but today was probably one of the better ones that I played, just because I identified how we were moving in the range, and I had identified that, on this hour, we were already showing signs of strength, and we had already closed, I believe, on a, let me look at a 5 minute here. On a 5 minute, in the first 5 minutes, we had already drawn on the high of day, right? So 8:30 to 8:35. If you're looking left, we had already closed higher than that or than the high of day that we currently had, and so that was a bullish sign for me to extend up from the 25,650 area up into this 25,950. And so, like I said, we didn't get the full target because price ended up coming right here at 915 and 920, and then it comes down around 925, 930, just slipping our trailing risk, which is fine. And then it did go ahead and extend in the second half, like after lunch. It did go ahead and extend up there 12:45 into 1 p.m. It did extend and take that 25,950, and then you've seen sellers, you've seen buyers probably had their limits sitting right here, and that's why you see the market kind of fall back over into the range. Now, the one thing I will say structure-wise when it comes to 15.5, like intraday going into tomorrow, the only thing that's really, is kind of showing me more signs of strength is that they're not breaking the demand candles, right? So you have this area here, right? And I think that they will maybe like overnight, but they're not breaking this area. Now, if they gap down to start here in about 10 minutes, like at the market open for Tuesday, then maybe they'll come back into the initial balance in the range from yesterday, and then we'll reaccumulate to go higher. But overall, me personally, I still see more upside on NQ. But I would like to see a return back into the 650s and potentially like market open tomorrow. So we'll see. We'll see how the 4 hour, like I said, the 4 hour has a demand way down here. We have this imbalance, like I said, in 25,650, which we'll be acknowledging tomorrow. And then we have, a really overbought area, I believe, going into the overnight. So I wouldn't put it past them to see some sell side back into this range, and then to possibly reaccumulate to go higher going into New York tomorrow. And then targets for that, since we, if we're looking to go push highs, I'd say some areas that I'm really looking forward to are this supply area, 26,000 like 150, and then 26,200 whole level, so like getting right above that. And if you're looking left over there on that daily, then we're starting to move into that daily supply. And then also I would say the high from January 29th. This would be when overnight basically bought up and then sells off super fast here. I would say all this area here up to 26,300 whole level is going to be a target if we're going to continue to push out of these areas that we did from yesterday. Okay, so we went over the intraday. Let's see. Like I said, if you're not a part of the free Telegram, definitely jump in there because that's where we do trade updates, like so our risk and how we ended up doing it, and then as well as just pretty much any updates on like when we're gonna go live and stuff like that. So that was pretty much the move for me today. Like I said, I don't want to try to guess what could happen tomorrow. We're just gonna hop on and see what overnight gives us, and then see if we can define edge going into the rest of the week. But really quick, I just want to say this, trade safe, because today we had a red folder at 9 a.m. and then tomorrow we have red folders at 9 a.m. right? Then there's red folders at non-farm employment changes at 7:15, then another one at 9 a.m. And then Thursday looks jam-packed, right? They're going to have a lot of crazy stuff going on. So you just want to be safe, and you just want to make sure that you have maybe less volume for yourself. It depends on what your edge presents. But also as well, these are days where I would say trailing risk really comes into play because you don't want to take yourself out of something that you can maximize, right? If you put yourself in a position where you're just like, I'm going from A to B and I just want to get a target, right? Like for example, like let's just say, and then like right here, like I take this position and then I just want to go 50 or 60, 70 handles without using any trailing risk management, then I might miss a move that goes for 400 or 500 handles. Okay. Oh, cool. Thanks. And okay, cool. So yeah, we'll let the market open here in about 5 minutes, kind of see how it opens, and then we'll be back again most likely on Wednesday for a trade recap. So if you guys have any questions, let me know, or if there's any quality or sound issues, just let me know. But I'm gonna move this back over here. Move this one back over here. And then, like I said, too, over time, I'll go over the ES trades because it was relatively as similar as well, right? You had the first 5 minutes was 8:30 to 8:35, just explosion, and then if you go and study lower time frame, right? That's the only way I would think that you could probably find a position with edge, which this would have been 34 to 35 right there. And then so it's like if you didn't like if you seen this candle close higher and then that same NCE is the same time the NQ happened, I would say this would have been a really nice setup, right? When it comes to ES, using the same timing, same rules that we like to look for, because you're looking at R multiples, right? So anytime I can risk about 5 handles for 15 or more on an ES trade, right? Those are really good setups in my eyes, okay? And so let's look at it from this perspective. 1 minute, right? 5 minute, and then we'll go 15 ES, okay? And so same situation, same time, 8:34 NCE type of entry, and that's what you're gonna get usually in a bullish continuation setup, right? Is a NCE framed up edge on a 1 minute. And so right here, this is where you got that sign of strength, 34 to 35, and then right in that next candle, you've got to be taking the entry, putting your risk at prior bar low, right? And let's just say hypothetically you got the 5 points because that's what we like to look for. Now, if you can condense it down, then great, but just this is a probability over time, right? And then the same thing you'd be looking for to grab, which what we were looking for was Friday's high, right? So the overall target on this, when you look at the R multiple, right, would have been a 1 to 6, and then same situation applies right here, right? 9 to 905, what'd you get? You got a close higher, right, which was a sign of strength, right, in that market, and then you had a down candle and an uptrending market to trail your risk. So if you had 2 minis on, for example, right, you're shooting for, your risk is about $500, and you're going for about a $3,400 gain target. Now, when the price gives you that certain price action, you're able to take one of those minis and go ahead and secure, right, down candle on the uptrending market, go break even on the remainder, and then trail your risk until you get to your upside target, right? Because sometimes we don't always get to our upside target, but that would be a pretty good trade, like I said, right there to deliver. And then let's say that the same situation happened, like let's say you had 2 minis on here, right, and you trailed that risk up on one, and now you had trailed your other, so you trailed that one up to the same time and same area that we did on NQ, and then you trailed your break-even trade up to the down candle in the uptrending market, right? So now you have risk definitely deep in profits. Now it comes and takes you out, right? Like in this situation here from ES on that 1 minute setup, it comes and takes you out up here on your first contract. So you've done, let's just say 36 handles, or 30, what would it be? Yeah, let's say 36 handles here times $50, right? So what is that? 36 times 50. So that's closing out $1,800 right there. So let's just say it hits you for that 1,800. Now you're like, well, what do I do with that remaining contract? Well, you could either leave it at the down candle in the uptrending market and wait for price to give you structure, right? Like wait for price to give you something like this. So you had one knocked out here, and now you're still sitting with one here. Price comes down, you're like, holy shit, don't manually take yourself out. Let price do what it did here, build, and it makes that new high right here. Now you can take that risk from here, right, and move it to the new down candle in the uptrending market. It could be this one, or in this situation, right, because you've already gotten closed on half the position, I would probably go ahead and move it to here. Now what you're doing essentially, right, is you took that trade and you've maximized your efforts, right, because you already got hit out for 1,800, so you've already secured a bag. Now you've gotten a new low, and you're holding this, what, 20, let's just say 30-point area, so you're still holding about 1,500 in profit, and price goes and closes higher, and now you just move this up to like 33, so whatever half of 33 is, right, and you continue to do the same thing as the 5 minute and the 1 minute continues in your favor, right? And so ES, I think, could have really actually been the play today. You know, I mean, as we trade live more together, there will be people that will take trades on ES as I'm taking NQ trades, because it was essentially the same timing. Okay, and so that's ES. Let's go here and look at what they give us over here really quick on the open, and then we'll be out of here. Okay, so yeah, we'll see how they play as they come into this to the session today. But with that being said, that'll probably be it for me on the trade recap. Like I said, we had just to kind of recap one last time. We had that daily demand area as our bias for the day. We already had an expectation to see bullish continuation. We ended up seeing that, and so we'll see if we can go and make a high past this 25 or 26,300 level, and maybe we can even reach for all-time highs like ES did. Right, ES is already delivered, so maybe it's our turn to go and do the same thing here on NQ. These highs will be the ones, right? 26,350s, but I think it'll take a lot for us to get up here to these highs here, 26,500. But right now it's looking pretty doable. All right, so cool. All right, y'all. Well, I appreciate you guys. I will talk to you guys on the next one, and have a good rest of your day. Unless there's any questions, I'll kind of sit here for a second. Unless there's any questions, really quick. Okay, cool. All right. Well, that being said, appreciate you guys. See you guys on the next one.